Okay, hi, I'm Kyung Hwan Kim. I'm on the Faculty of Economics at Sogang University in Seoul, Korea. I'm very happy to be a participant in this important workshop on rent regulation, and I try to present a Korean case study, which is mostly descriptive of the system and policy issues. Okay, I'll start with a brief overview of the Korean housing sector and then talk about the recent developments in housing prices and affordability. And then I'll explain the key features of the private rented sector in Korea, highlighting the rather unique type of lease, chonsei. And then I'll talk about the rent control, rent regulation system, and how we came to have this current version of the regulation and what happened as a result of the revision of the law governing private rented sector in 2020. And then present some policy issues and reform options and the difficulties that lie ahead. Right, here's the housing in the Korean economy. As of the year 2020, we have a total population of about 51.8 million, and we have a total housing stock of 21.7 million, of which nearly 63% are in condominiums. We call them apartments. And the number of dwellings per 1,000 inhabitants is about 418. And over the past 50-year period, residential investment accounted for slightly over 5% of GDP. And housing is a dominant household asset in Korea. And home ownership rate is pretty stable at around 60%, slightly over 60%, whereas owner occupancy rate is about 58%. Mortgage debt outstanding is about 47% of GDP, which is comparable to the number of the European Union. Here is a brief summary of the of housing policy in Korea. I'd like to highlight that the overarching policy goal in Korea is to promote housing price stability. Every government has tried all kinds of measures to stabilize those prices and then increase the supply of new housing and allocate them to mainly first-time home buyers. We have a system of direct provision of public sector housing by a state enterprise called Landed Housing Corporation. And public rental housing stock has increased over the years. Now it's about 8% of total housing stock. We have both demand side and supply side subsidies and housing finance support, but we have a large number of regulations governing the housing sector, including the price control on new apartments and rent regulation and macro-prudential regulations. These are selected indicators of housing, owner occupancy rate and home ownership rate I explained. Well, I'll explain what chonsei is in a minute, but this is a breakdown of rental lease types. And it takes about 8 years for a household to buy home for the first time. And then affordability measures, we have the price income ratio of 5.5 as a nation, but it's according to a different source, it's about 7. And then rent to income ratio is pretty low at 16%. And the average length of residence for renters is just over 3 years, And for owners, it's over 10 years. So the total average is around 7.6. And floor area per person has increased from 26 to 34 square meters between 2006 and 2020. So the overall housing condition of Korea has improved substantially over the years. Now, turning to the recent market trends, over the past 5 years, Korea has experienced a very rapid increase in house price, uh, like many other countries in the world. If you look at this purchase price of condominiums in Seoul, it more than doubled over the 5-year period. And we have different price indices, and they tend to move together. But recently, there has been some discrepancy between two indexes based on assessed price. But this one, the yellow one, is the index based on the actual transaction price data. And if you use this actual transaction data, Korea is among the countries which have experienced quite high house price increase in recent years. And according to Knight and Frank, South Korea was ranked 8th or 9th, depending on whether we use nominal or real measure of the rate of increase in house price in 2021. And the price to income ratio in Korea has increased to 7.6 over the 10-year period. But then in Seoul, that ratio has reached 19. It's almost the highest among the major global cities in the world. Skip this demography survey you're probably familiar with. Okay, so what do we have in the private rental sector? In Korea, 63% of the dwelling is in condominiums, and there is no clear distinction between owner-occupied unit and rental housing because they are interchangeable within the private sector. And we also have rent-to-own housing schemes, which are counted as rental housing stock. But eventually they become owner-occupied units. We have jeonse spelled differently in recent years, but this is a unique rental lease type in wide practice in Korea for many years. To put simply, the tenant leaves a sizable lump sum deposit upfront at the signing of the lease. And this typically it's in the range of 50 to 70% of the purchase price. But the tenant pays no monthly rents during the tenancy. And then the deposit is refunded to the tenant in full amount at the end of the lease. This is similar to the anti-crisis leases described in Navarro and Turnbull RSUE 2010 paper. And we do have a small share of monthly rental leases, but in between these two extremes, there is a continuum of hybrid leases with different combinations of deposits and monthly rents. And taxation of rental housing is a big issue because most of the rental housing in the private sector is provided by those who own 2 or more houses. But sometimes these people are considered speculators and are subjected to punitive taxation, depending on the political inclination of the ruling government. But if you qualify as registered rental housing providers, then you can get some tax breaks. All right, about Chonsei, if you call P the asset price and D Chonsei deposit, and the F&I some sort of interest rate, then the relationship between the asset price and Chonsei deposit is such that the deposit to price ratio is 1 minus expected rate of appreciation of housing over the interest rate, which means if house price does not appreciate at all, then this ratio will be 1, meaning Chonsei deposit will be equal to the full amount of the price. And this ratio falls as the rate of appreciation gets bigger. Okay. And this is what we've been seeing in recent years in terms of Chonsei deposit to purchase price ratio. It has up and down depending on the market interest rate and the expectation about future house price increases. And because we have a continuum of hybrid leases combining a different amount of deposit and monthly rent, we need an interest rate to convert deposit to monthly rent and vice versa. And this is the market rate of the conversion rate, which tends to vary across location as well as across dwelling type. But in the law, there is a stipulation that a 2% percentage over the basic policy rate set by the Bank of Korea is to be used to convert deposit into monthly rent for policy purposes. And this is the size of the private rental sector. And this is a number of dwellings registered for rental housing, and this is a number of registered landlords. And there are about 8.5 million renter households in Korea. All right. Because Chonsei represents a large share of the rental market, there have been efforts to protect the Chonsei deposit of the tenant. And we have a system whereby the tenant can establish its residence in the rented unit, which will protect the deposit to a certain extent, just in case the landlord fails to return the deposit in full amount. And the tenant can also purchase an insurance at a subsidized rate from the Housing and Urban Guarantee Corporation, which is a state enterprise. And then we have this rent regulations. There are 3 things that I want to highlight. First of all, it is a tenancy rent control in the sense that the ceiling on the rate of rent increase is fixed only during the tenancy, and the rent is reset for a new lease after the existing contract expires. So it will return to the market rate. The standard lease period was initially 1 year, but it was extended to 2 years starting in 1990. Secondly, it's a uniform system. It's a national regulation, not a local regulation, and it applies to all types of housing in every locality. In addition, the regulation applies to the entire housing stock, regardless of the age of the buildings. And this is contrasted to rent regulations in Berlin or New York and many other cities. Now, the current system we have has 3 key components. The first is that the tenant is granted the right to have the lease extended for a second 2-year term. And the landlord can refuse to extend the lease only under special circumstances, such as he himself or his family members move in at the end of the initial lease. Secondly, the maximum allowable rent increase was 5% per year prior to July 2020, but now it's lowered to 5% per 2 years. Thirdly, the tenant and the landlord must report the major features of a lease contract within 30 days from the signing of the lease. And there is a penalty against not doing so. The two provisions took office at the end of July 2010, but the third one was supposed to take effect on June this year, but was postponed by 1 year. And that decision was made very recently. Well, one obvious consequence of this new system is that some existing tenants exercised the right to renew according to the provisions of the law. But as you can see, the exact share of the sitting tenants who exercise the right to renew vary across housing types. So in the case of condominiums, 68% of the renewal contracts comprise exercising the right to renew, for example. But there are other categories where the percentage is in the 20s, and the 30s. Okay, so to some extent, the new system succeeded in increasing the share of sitting tenants opting for the second 2-year term as the tenant. One major consequence of this was an abrupt rise in 전세 deposit. If you look at this table, the left column shows the rate of increase in the 전세 deposit price for the first 2 years prior to the change of the law, and then less than 2 years after the law has been revised, and you can see the big differences in the rate of increase in 전세 deposit. The overall all housing type and condominiums in all locations, there has been a big jump in 전세 deposit increase. And you can verify this on a graph like this as well. And secondly, some distortion has emerged as a consequence of this new system. We now have 4 different contracts and prices coexist because there are new lease contracts reflecting the market price. Then existing tenant who exercises a right to renew at a maximum increase of 5% for 2 years, and then existing tenants who do not exercise the right to renew but negotiate a new rent for renewal with the landlord, which means at the end of this 2-year period, he or she can exercise the right to have the lease extended for another 2 years. An impact on the housing purchase market is also observed because depending on whether there is a sitting tenant in the house that I want to buy, I will pay a different price because that will affect the convenience or difficulties in terms of my moving in after I purchase the house. Okay, of course, there have been some compounding factors which might have mitigated the impact of the new rent regulation, such as an increase in the comprehensive real estate holding tax on multiple home ownership, so that the additional tax burden was passed on to the renters. And there has been a recent decrease in the number of completed condominiums in Seoul. And of course, there must have been the impact of the pandemic and recent increases in interest rate. But all things considered, the apparent uh, uh, difference in the rate of increase in Chunse deposit around July 2020 appears to suggest that the new system must have the dominant impact on the market. Okay, so what is likely to happen going forward? Well, people are anxiously awaiting what will happen come August 2022, because those who exercise this option to renew their lease contracts will have to come out on the open market to search for their new rented housing. And uh, nobody knows for sure how the market will play out. And then as a result of the combination of this uh, rent regulation and heavy taxation on the ownership of multiple houses, the rate of return on rental housing business has dropped, and the new supply of private rental housing is likely to decrease in the years to come. And as a result of an increase in the interest rate and the resulting increase in the uh, lending rate, which has sort of exceeded the conversion rate that I described earlier in my presentation, we are witnessing a shift from Chunse to monthly rental leases in recent months. There are several issues regarding this rent regulation reform. First is how to balance the interests of the landlord and the needs of the tenant, and how to manage the transition if we do revise the law again. But certainly, if the law were to be revised, it should apply only to the leases that take effect after the new law is enacted. And we can think of some options, but the opinion is divided. On the one hand, people say we have to act now to prevent further distortions. But some other people argue that let's wait and see how the market participants adjust to the new system and think about what to do. Now, one option obviously is returning to the pre-2020 system. Politically might be difficult. And the second option is to leave the tenant's right to renew as it is, but raise the rate of allowable rent increases to make it more palatable to the landlord. Thirdly, we can think about adjusting the ceiling on the rent increase, but also provide an incentive to the landlords who do not raise rent too much. Final slide, a rough road ahead. Well, it is much easier to introduce a regulation than to remove it, as we all know. And political landscape is not very favorable to reform because the opposition party holds 172 out of 300 seats in the National Assembly, which is the parliament equivalent. And the current ruling party holds only 110 seats. And we need to, if you want to revise law, we need to go through the National Assembly. But the opposition party does not want to revise the law. And more seriously, public opinion is sharply divided. Well, the overall opinion is in favor of revision of the law, but the opinion is sharply divided depending on their favorite party. So supporters of the opposition party are strongly in favor of no change to the current system, 69 to 18%. Whereas those supporting the ruling party call for revision, in 83% to 5%. So these are some of the challenges that we need to deal with in terms of implementing the change in the law once we figure out how we want to revise the law. Thank you for listening.
Thank you very much, Professor Kim. Now the questions. I think that
Hello, Kyung Hwan, here's Achim.
Oh, hi.
Hello, how are you?
Very good.
Just a question for clarification on the Chonzai. The interest on the deposit is collected by the tenant, right? And then, in addition, you have the rent payment, because you're talking about the 5% rent increase ceiling all the time. So it's not that the landlord receives the interest on the deposit and uses it as a rent payment. Just a technical question.
No. In a pure Chonsei, the tenant doesn't pay monthly rent at all. And instead, the tenant leaves a lump sum deposit upfront to the landlord, and the landlord will invest the money in whatever asset he or she thinks is optimal, and whatever return he or she gains from investing the deposit, the landlord will keep it, and there is no cash flow coming from the tenant to the landlord during the tenancy.
There's no rent control. There's no rent control in that case, right?
No. Well, but the thing is, this 5% rule applies both to the deposit and monthly rents. So if it's a pure Chonsei system, Chonsei lease, then you cannot raise the amount of deposit by 5% larger than 5% over the 2-year period when the tenant exercised the option to renew it. If it's a combination of
an increase of the deposit, okay.
Yeah, if it's a combination of deposit and monthly rent, again, each component can be raised within the 5% shielding for the 2-year period.
And then you are talking about a Chonsei price increase. I mean, you are referring to the loan to value ratio of the deposit. Are you referring to, is the loan to value ratio increasing? You initially spoke about 70%. So where's the loan to value ratio now after
it's not loan to value. Well, it's deposit to price ratio.
Well, yeah.
Right. It depends on location and also dwelling type. So this in the case of condominiums, right? For example, in Seoul, it's around 55%. Nationally, it's about 65%.
And one empirical question finally, you have an extremely short-term tenor here in terms of 2 years, then expanding to 4 years. But what has been empirically the ratio of rollovers, where simply landlords and tenants kept the arrangement and rolled it over? And so what is the marginal difference here between that law that basically increases from 2 to 4 years and a free market solution where they both agree to roll over?
Yeah, that's a great question, and I don't have a perfect answer to that, but my speculation is, if you look at this slide, which I showed earlier, the average length of residence among renters ranged from 3.2 to 3.6 years, which means when the default lease period was 2 years, I guess more than half agreed to have their lease renewed. I mean, according to the terms agreed by the tenant and the landlord, right? Now, government claims that now this average length of residence is close to 5 years. So they're talking about 1.5 years of additional, stability, as you will, from the viewpoint of the tenant. But that needs to be verified.
Thank you very much. We have one more question, please.
Sure.
Is that me?
Yeah, I'm listening.
Okay, well, thanks very much. It was an absolutely fascinating presentation. It's a very unusual
Thank you, Peter. Hi.
system you have in Korea. It's absolutely fascinating, and I really enjoyed it. I was going to ask about the August 2022 crunch point, really. And I was going to ask if tenants could actually roll over and continue, because you said tenants have to either buy the house or find somewhere else. But I got the impression from your answer to the previous questioner that they can roll over the lease. Is that correct?
Sure, it is correct. The difference is that if you are a sitting tenant, right, you have the right to have it extended for 2 years within the rate of increase of 5% over the next 2-year period. Now, if once you exercise that option, you cannot exercise the same option again at the end of the 4th year, but you can still negotiate a new lease with your landlord, and hopefully it will probably close to the market, but both the tenant and the landlord will try to minimize transaction costs and any other inconveniences of moving. So in theory, yes, they could strike a deal after the 4th year.
Okay, that's fascinating, because it's a crunch point, and a lot of people would have to find alternative rental accommodation in August 2022, which would create panic in the market, which would be made worse if the rate of empties, the vacancy rate, is very low as well, because you can't move. If its vacancy rate is nil, no one can move. So,
right.
You could see rents going up and a hell of a lot of panic if people try, lots of people try all at once to try and find somewhere else